So hi everyone, these are absolutely crazy times to invest in. Maybe probably the best years in a whole decade. We'll see how this ends up. So in short, in this video what we'll do is start building together a portfolio. If you don't have your portfolio yet, this video will start giving you tools on how to select your stocks, on which way to give them, on deciding when and how to invest in them, and the risk of selling them also when the market is down. So the objective of this video is really to help you build your own portfolio. I'm not a financial advisor, these are not financial advisors, and one of the objectives also is to see over time how all three of these portfolio evolve, how they go up and how they go down, and this will give you perspective into potential action you might want to engage in and define your own principle as to how you decide to invest. So these videos take quite a bit of time. Feel free to subscribe, like them, and leave your comments below. It would really help the channel. Thanks. So now the third portfolio, and I called it the YouTube portfolio. So this is basically the companies I personally invest in. And you see big companies like, again, Apple and Amazon, and then Tesla, which is more than 60% of my own portfolio. We'll see ARK, and we'll go a bit deeper into each of the ETFs that they have. I love investing in China, so that's why I have Alibaba, Tencent, and JD. DEXCOM, as I mentioned, I think they're doing something quite interesting right now for diabetics, and I really think it could be extrapolated to everyone who's conscious about their health, but who might not be diabetic. So that's why I think there's still a lot to grow there. And then obviously semiconductors and chips, AMD and NVIDIA, which for me can really see a huge increase. I mean, if you look at NVIDIA now, everyone who's doing a smart car will need autonomous driving or whatever, they will need chips. So they will need AMD or NVIDIA, and we see that already big manufacturers like NIO use NVIDIA, which is very, very important. And then obviously NIO, I think it's an interesting company to keep an eye on. Is it the next Tesla? Who knows? So in this portfolio, there is no doubt for me today, well, the market's a bit up. Unfortunately, I wanted to finalize this video a few hours before. But nevertheless, now I'm committed to this, and the prices that are currently there while I film. So I'm going to buy $5,000 worth of Tesla just today, because I think it's absolutely undervalued. The main reason for me is full self-driving level 5. No one is close to them. I am absolutely sure that no one is close to them. We've heard some analysts say that they were just at level 2. I think that's completely nonsense. First of all, they're the only ones to build their own chip, which is, as we've seen with Apple a few years ago, they have to really integrate their chip and their software to make it really work well, and that's what they're doing themselves. So they build their own chips, where most people rely on NVIDIA. They have their own software, where most people rely on Intel's Mobileye. And they have 100 times more than miles driven than the entire rest of the industry in regards to autonomous driving. And that is very important, because those miles will feed the algorithm to continue its self-learning. So that is absolutely important for them. And so with this self-driving, not only they're going to make tons of pure profit from it, from people who buy the Tesla and want it, and I think more and more people will get into it, because we will reach the level 5. Second, there will be a monthly subscription instead of a $10,000 lump sum, which will obviously help undecisive people to go and try it and then hopefully stick with it, versus the lump sum of 10,000. You might not want to put this before having tried it. The second thing is Elon Musk said this was going to be for this year. The third thing that they said is that he's going to license it to other car manufacturers. So that's going to be tons of profit by just clicking on a button, because the gross margin on replicating a software is absolutely close to 100%. And so I think for me that's really where we differentiate the legacy car manufacturer to the new ones. It's, yes, in one part the engine of electric versus internal combustion, but I think mostly it's how they innovate into these added value services. And one of the major ones for me is the full self-driving. So now we did the same with the growth companies. So in terms of this portfolio, you'll see that we have big companies like Apple, Microsoft, Amazon, Facebook. Now we have also Tesla that just came in, Alphabet, which is Google, Visa, NVIDIA, and MasterCard. So you see these are really big, usually technological companies. So today I'm gonna invest 3,000 in Apple, 1,000 in Microsoft, and 1,000 in Amazon. And here are the reasons why. So I really like Apple because it has absolutely great financial KPIs. Their debt to equity is extremely low. Their price earning is very low compared to their peers. And what I really liked is at the end of 2019, there was a very interesting interview with Tim Cook, and he said he really wants Apple to go down in history as the company that helped health, that contributed to health. And currently they don't do that much into health. And so this is why I think there's going to be major product that no one is even looking into now, that will come in the future years. And we know they have a very interesting partnership, such as the one with DEXCOM, which develops very innovative smart devices for diabetic people. And they have a very big partnership with Apple, which wants to miniaturize their device, probably to also cater for non-diabetic and for everyday people who just want to be aware of their health. So that's very interesting. What I love about Apple also is that they totally diversified their income from the pure sales of iPhone, and this is why they launched so many services about a year ago. And I think there's really not a lot of risk of investing in Apple. It could go down maybe in 10 years or so, but I think for the future years, it might not double or triple like some other companies, but I think it's quite safe to invest in Apple. The next one is Microsoft. So Microsoft really did a comeback a few years ago with the new CEO. I think their subscription model is what made them turn around. And some of their new product, but basically their subscription product, where instead of buying Office once for a lifetime and then you had it, now you pay every year, really changed their model and their revenue. So that's really good. And then Amazon, of course, Amazon in the US currently only 20% of retail sales are done via internet. So their space to grow is still absolutely huge. We're only seeing the beginning of the S-curve, and that's what's really exciting. And on top of that, their major revenue stream is not their e-commerce anymore. It is the AWS, the cloud storage for retail and for companies. And that is very important because it shows that they managed to continuously reinvent themselves, just like I mentioned with Apple and some others. So that is extremely important, and that's why I like Amazon. I do think that their price earning ratio is quite high compared to others, but still like them, and I still think there's still a lot of growth there. So the first portfolio is called Value. And obviously we're going to have value stocks in there. So what are value stocks? They're generally more matured company, which most of the time have quite interesting dividends, but in which the stock itself, the value of the stock, the price of the stock doesn't really increase that much over time. So I took 10 of the biggest stock in one of the growth index, and you can see some very reputable companies like Berkshire, Hathaway, JPMORGAN, Johnson & Johnson, obviously Bank of America, the Walt Disney, Intel, COMCAST, EXXON, VERIZON, and AT&T. So today we're going to invest $5,000 in this portfolio. So it means we're going to put $3,000 in Berkshire Hathaway, $1,000 in VERIZON, and $1,000 in the Walt Disney Company. So I'll tell you very briefly what I like about them. We will do more in-depth video on each of these companies. And that will help you decide if you are interested in them or not. So the things we look in the company is usually, well, obviously its service, its mode, its competitive advantage, and then we will look at some financial KPIs, operational KPIs, and then valuation. So the first company, Berkshire Hathaway, this is the company owned and managed by Warren Buffett and Charlie Munger. Both of them are reputed to be amongst the best investors of all times. So basically what they have is a holding that owns a bunch of different companies, and their portfolio, 40% of their portfolio is in fact Apple. And this is why I kind of like them. Is first of all, I really like Apple, and we'll get to this later. The second, as you see, in these very volatile times, if you look at the stock of Berkshire Hathaway, not only it didn't go down, but it went up. So it's always a good add to your portfolio to sort of balance this fluctuation. And if you don't like risk that much, well, this is really a great company for you. So the second stock is Disney. I'm very interested in what they did with Disney Plus, which is a sort of competitor to Netflix. We'll see where they go with this, but I think it's quite an interesting company to look at. And then the last one is Verizon. So I hope you enjoyed this video. Feel free to leave a like, leave your comment. It really helps. Follow the channel, subscribe to be aware of the next video. Thank you. Bye.